Hello, good morning, good afternoon, good evening. I'm Dodo FS by name. Today we'll be talking about market structure, liquidity, and point of interest. This video will be a very long video, so I'll try my possible best to break it down into smaller time from like 4 minutes each. Then I'll drop the complete video there too also. So stay attentively. We'll be talking about market structure, liquidity, and point of interest. Market structure, liquidity, and point of interest. So first of all, what is market structure? Market structure is a framework or a current condition, behavior, or a flow of markets. What I mean by that is market structure is the movement of price from one point to another. Let's say market move from this point here, from this point A to point B to point C, point D, and point E. So the movement of price from one point to another is what is called market structure. Understand, right? So that's what market structure is all about. Market structure is a framework or current condition, behavior, or flow of market. The direction of market is going from one point to another is what we call market structure. That's what market structure is. Market structure is a framework or a current condition behavior or a flow of market, or a flow of market. It just simply means, let's say if you're traveling to somewhere like this, you'll be moving from one point to another. When you're moving in one point to another, you're not moving in straight direction. In that same point, you'll be going to one point to another before you reach your own destination. So that's what market structure is all about. So we also have two types of market structure, which is we have the trending market and we also have the ranging market. We have types of market structure. Types of market structure. You have the, let me name it out. You have the trending market, and we have the ranging market. So the trending market can also be the uptrend and downtrend, while the ranging market can also is a consolidation market. So we're consolidating market. Let's talk about the uptrend and the downtrend of the market right now. The uptrend market is when market moves. In the trading market, we have the uptrend market. Okay, let's talk about the uptrend and downtrend of the trading market. Okay, let's talk about the trending. So now let's talk about the trending market. The trending market will have the uptrend and downtrend market. Is when price move from an upward move one point to another, creating a series of higher highs, higher low, higher highs, higher low, higher highs, higher low. So that's what we call an uptrend market. That's what we call an uptrend market. When price move from series of higher highs, higher low, higher highs, higher low, higher highs, higher low, this is what we call an uptrend market. Uptrend. Uptrend market, right? The price has been creating a series of higher highs each. Series of higher low, higher high, higher low, higher high, higher low, higher high, higher low. While for the downtrend market is when market is forming the series of higher low, lower high, lower low, lower high. While for a downtrend market is when market is creating a series of lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, and then lower low. When market is creating this form, like it's creating this form, let me label it lower high, this zone here, lower low, then lower high, lower low, lower high, lower low. So that means price is creating one. It's going from point A to B, point A to B, point A to B. That's what price has been doing here. So that's what a downtrend means. Now my market is going from point A to B, creating a series of higher highs and lower low. For the downtrend, is creating a series of lower high and lower low. So let's label this place downtrend. Downtrend. So let me show you an example here. From this chart, you see price has been moving from this series of lower low, higher high, higher low, higher high, higher low, higher high, higher low, higher high, right? So if I bring out this structure here, what do you see? Higher high, higher low, higher high, higher low, higher high, higher low, higher low. Same verse fast, same with the downtrend movement. Price has been creating lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower low, just the way I explained it. This way, see it, right? This is why I explained it, right? So yeah. So now let's talk about ranging market, also known as consolidation. In forex, consolidation is a period where a currency pair price moves sideways within a defined range after a strong trend. So instead of price to break a zone to be creating new highs, price decide to range in that side, in that certain levels, giving you like this series of maybe from support level to resistance level, then from resistance level back to support level, from support level back to resistance, from resistance level back to support level. Price will be doing like that, then back again. Instead of price to break these zones, it is just be respecting this resistance level and then support level. So this is what we call consolidation or ranging, because price just keep on respecting it. Price keep on rejecting from these zones to these zones. So your advice is advisable not to trade this range, except maybe price decided to, like, after consolidating like this, after consolidating more, then price break the zone, then it now pulls back. Maybe there's a pullback. That's when you enter a trade and continue your buy. For instance, is for buy, right? Or if price decided to, after a ranging opportunity like that, after ranging like this from one zone, or maybe price decided to range after ranging from one zone, or after price started ranging from one zone here to this zone, this zone, to this zone, this zone, to this, and then it decided to break these zones. Then the pullback, that's where you find your enter and sell for selling opportunities. Got me right? That's where you find your opportunity and sell. Maybe from these zones, from this zone here, with your order confirmation, then you sell. You sell from here. Right? You sell. And this zone you buy, because price has already broken this consolidation that is in here, right? Then you buy from these zones. Let me show. I'll show you an example. I think I have one in my chart here. I'll show you an example. Then you buy. It's all right. Then you decide to buy. Let me check this. I have an example I need to show you here. This is an example of consolidation. I think I should be having it in my chart here. I'm looking for, okay, see there. Already notice. What do you notice? IYKE has been respecting this resistance zone back to the support zone, back to resistance zone, back to support zone, back to resistance zone, back to support zone, back to resistance zone, back to support zone, right? Then when it now finally breaks from this zone here, you know this is where price broke. Let me show you. Let me view it out for you so that you see it. This is where price decided to break it. Decided to break the zone. After market ranging from one place to this zone, this zone, to 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 this zone, and then it now decided to break. What did you notice? It now pulled back, and it now gave us this long buy here, right? It now pulled back to respect it. That means before you now continue on this long buy from this test, after it breaks, it now come back to retest it, giving us this long buy. For those of you that know your price action very well, this is what we call resistance turning to support. it now moves, right? That's what happens. Let me just pick this thing like this right here. This chart, this is what is here like this is called consolidation. Let me show you. Let me pick this in here. Here like this is what we call consolidation, right? It's what we call consolidation. Here like this is what we call consolidation. So that's what consolidation means. It's all about. So that's what consolidation is all about. So next we'll be talking about now. Let me give you an example with this. If you notice what market has been doing here, price has been moving up, creating series of higher highs, higher low, higher low, higher highs, 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 then higher low. What did price do? Price break these zones here, then it now pull back here, pull back again, then it now pull back up here, and then pull back, and then tap to my entry. My strategy of trading is structure, liquidity, and point of interest. So I'm focusing on the the market structure part before I go to inducement. Then it now try to go on my own way here. Understand? What did you notice? So price has been creating series of higher highs, higher low, higher highs, higher low, higher high, higher low. Then this zone here is called break of structure, right? This zone is created. So this zone here, price decided to break these zones here. Then it now pull back, then pull back again, pull back. Then it now tap to my entry here before it now make this big sell. Let me show you another one again. Okay, price broke this zone. Price broke this zone here, went up here, pull back, went up, pull back, put up. This zone here created it created a market structure shift here, because this market has been selling, right? Then price broke this zone here to give you market structure shift. Then that's how we got the buy. Okay, let me give you. I'll give you an example of how the market structure shift on the buy limit looks like. I didn't give you an example of how it looks on the sell zones. For sell, market structure shift on the sell level. Let me give you an example of it. Market structure shift on the sell level, just like this for an uptrend, and let them give you for the downtrend. Okay, let's see. Price has been. Let me use this. Let me just use this one here. Okay, price has given you a series of lower low, lower high, lower high, lower low, lower high, lower low, lower high, lower low. When price break this zone here, maybe price do like something like this, and then now pull back. And price break this zone here, and then now pull back, continue on that same direction. This zone here, this pullback here, that price broke this zone here. Can't call it, sorry. Can call this zone here. can call this zone, here MSS, because price break the recent high, recent lower high here, and here for this year price break the recent higher low here, the recent pullbacks. After this break of structure, the first pullback price did, instead of price continue on its down sell, it then now break this zone. So that means if once price break this high here, it's telling you that the market is no longer going to be selling. The market is on a new direction now. So that's what comes to our definition here. Market structure is an indication that the trend is about to end and a new trend is about to start. So we are on an uptrend here. Then price break this zone here. Then a new trend started selling for downside. Then price now break this zone here, and another new trend started forming. That's what it all means, right? So that's what market structure is. So for the break of structure, is when price break a recent level, that is the resistance level or the support level, to continue its current trend. I'll differentiate the both of them for you. For the break of structure, it means when price break the recent level, that is maybe the resistance level or the support level, to continue its current trend. Remember, in the MSS, when price break the recent levels, it changes direction, right? In MSS, it's an indication that the current trend is about to end and a new trend is about to start. That's for the market structure shifts. While for the break of structure, let's say we're having a series of higher highs. Let me use arrow now. Higher low. Sorry. Let's say we're having a series of higher highs. We're having a series of higher highs, higher low, higher highs, higher low, higher highs, higher low, higher highs, higher low, higher highs, right? So what do you notice for the break of structure? These zones here that price is creating here, this level that price is breaking, is called break of structure. This level here is called BOS. It's called BOS. It's called BOS. This zone that price is breaking here, this level here, is called break of structure. And mind you, difference between break of structure and market structure shift, the difference is that market structure shift and the current trends. Understand? But the market structure shift and the current trends, while the break of structure continues the current trend. It breaks structure to continue the current trend, while market structure shift, it breaks the recent highs or lows to change the direction of the market. Understand, right? While the break of structure shift, notice once it breaks this low, it is change direction, while the break of structure, once it breaks a high level or low level, it continues on that trend. This is for the bullish break of structure, for bullish break of structure, right? We have, let me show you the bearish break of structure. Bearish break of structure is when price moves like this, creating a lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. So when price is creating structures like break of structure here, 3 downside. I'm just using one I've seen here. I don't want to be downside. BS. Well, I'm creating zones here, creating break of structure here. BS. I'm just level it. It continues on that trend, right? It didn't change direction. That's what break of structure means. It continues on that trend. It didn't change direction. Unlike when market structure break a zone, it now change direction to an uptrend. So it continues on that particular levels. Understand? But price doesn't change direction. So whenever you're having a break of structure, let me show you from a chart. Let me show you an example of break of structure in a chart. This right here, it's an example of break of structure. Okay, let me show you that correctly. Price came here. Let me say this right here is an example of break of structure. Breaks it up, pull back, breaks it up, then now pull back, breaks it up. But there was a gap here, so price have to come back to fill that gap here. Then it now continue on that break of structure. Right, but first there's something I noticed here. Let me use it here. Each candlestick has its own meaning, understand, right? So each candlestick pass an information. So if you want to follow it like this, there's a break of structure here, you then now pull back, then now there's a break of structure here, then now pull back, break of structure here, pull back, break of structure here, pull back, then break of structure here, then there was a pull back here, and then break of structure here, then it now come pull back here, break of structure, pull back, break of structure, let's use this zone, and then pull back. I want to show you something here. If I'm to go to a lower time frame, let's say 5 minutes, let's say something, maybe to give us a clear version here in 5 minutes time frame. I'm sorry, it's going to give me a clear version here. Yeah, it gave me a clear version here. What do you notice? There's a break of structure here. There's a clear break of structure here. Another break of structure here again. Another break of structure here again. Another break of structure here again. Right? Then let's see, there's another break of structure here again. Then you notice price break these zones here. Right? Before you now started forming this break of structure here. Break of structures here. Are you noticing what I'm doing here right there? So that's what it means. As price broke this level here, as price broke this zone here, it changed character. Okay. It gives us market structure shift here from this zone here. Give us market structure shift in this zone here, because price has been giving us. If I'm going to pick this line up that I do here, if you notice it, market has been giving us break of structure here, 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 break of structure here. This is what we call pattern. This one is called pattern. I tried to design it out. Then it now gives us change of character here. Then it now started giving us a break of structure here. It's on a continuous trend. Understand? But whenever you see a market structure shift, that means the current trend that you are on is about to change. That means if you are on a buy level, you start looking for sell. If the market is on an uptrend, you start looking for a downtrend opportunity so that you enter the particular trade. That's what break of structure, and that's what break of structure and market structure shift means. So whenever I see a price like this, if I see a market structure shift, I'll start looking for sales on the trade. You understand, right? So that's what it all means. It all means. So now, hope you understand what break of structure and market structure means, right? I say market structure is an indication that the trend is about to end and a new trend is about to start. And how to identify a market structure shift is very simple. I said whenever there is a series of higher highs, higher low, higher highs, higher low, higher highs, higher low, higher highs, and then price decided to break the recent low. This is the recent low. Yeah. If this side is not formed yet, if this side here like this is not formed here, then this will be your recent low here, right? And also, if this side yet is not yet formed, this will be a recent low. So this is the recent high here. This is the recent high. This is the recent break of structure here. A recent resistance level. You can say resistance level, right? And this is a recent low here. This is a recent higher highs, higher low. This is a recent zones here. So when price decided to break this zone here, if you can identify your break of structure, you can identify your higher highs and higher lows. You decide when price decided to break this higher low here, right? That means the market is about to change direction. It will now start selling. You getting me right? It will now start selling. It will now start selling. That means the buyers are no longer in control of the market. The sellers are in control of the market now. Here will serve as your MSS. Then here will be your break of structure. Let me leave it here. Then here you can name it your BOS, right? That's simple. But the same vice versa. If price decided to break this recent high here, that means if I decide to break our recent high, and that means the market is still in direction, that means we'll be looking for a buy, not sell again. We're looking for a buy opportunities, not sell again, right? When the price decided to break this zone here, we'll be looking for buy opportunities. If price decided to break this zone here, market structure shift, then we'll start looking for buy opportunities like this, right? Name it BOS. You just start looking for buy opportunities. That's all. That's what it is. So it's just meant for you to identify your market structure. Your market structure is the information being passed on the information passed on the candlesticks. All these candlesticks pass in out information, right? Pass out information. Here this zone, there's a break of structure here. There's a break of structure here. Price break this recent high here. This recent lower high here. Then it now started giving us break of structure to an uptrend. Understand? But whenever there's a market structure shift, that means the current trend is about to end and a new trend is about to start, right? But on the market structure, when price break the recent highs or lows, it is a continuous trend. It's not ending. It's a continuous trend. MSS end the current trend and start a new trend. Why? BOS keep the trend going. I don't really understand it. It keeps the trend going. That's all about break of structure and market structure shift. So let me write the definition of BOS here for you too also, so that you can see it. I said market BOS is when break of structure is when break of structure is when price break a recent understand the key level. When price break a recent level, that level can be support level or resistance level, right? These zones here are your resistance level and these zones here are your support level, right? That's what it means. When price break resistance level or support level, resistance or support level, so is when price break of structure is when price break recent levels, that is a support level or resistance level to continue its current trend direction. Its current trend direction. To continue its current trend direction. Understand, right? That is what break of structure and market structure means. Market structure shift means it's an indication. It's an indication that the trend is about to end and a new trend is about to start. Right? I explain it to you very clearly. It's very neat out there. So that is one part of our strategy. We have finished the one part of our own strategy, the market structure. Under market structure, we have two types of market structure. We have the trending market and we have the ranging market. The trending market, we have the uptrend and the downtrend. Is when price moves in a series of higher highs. For the uptrend, is when price moves in a series of higher highs, higher low, higher highs, higher low, higher highs, higher lows into an uptrend. While for the downtrend is when price moves in a series of lower high, lower low, lower high, lower low, lower high, lower low. And we say the consolidation market is when it's a ranging market. Is also known as the consolidation market. Is when price is moving from one point A to B without breaking that resistance of point A to B. That means when price is getting rejected from resistance level to another support level, getting rejected, like keep on rejecting from that zone, and you are not advisable to enter any trade from these zones. You just patiently wait for a breakout. When there's a breakout like this, let's say there's a breakout from here like this, then you will look for maybe a buy opportunities here and continue from your buy zones, right? Continue for your buy zone. You wait for a breakout. You can't enter this trade when the market is consolidating. You are not advisable to enter any trade when the market is consolidating. Or from the downtrend here, let's say price broke the zone here like this, you now look for like selling opportunities and then you continue on your sales. You are not advisable to trade any ranging market. It's very dangerous to trade a ranging market. You will easily be taken out. These are called traps. Understand? But these are all called traps. So we have explained one part of the strategy of trading, which is the market structure. Now let's focus on the liquidity or inducement. Liquidity or inducement. Let me put it this way. Inducement, bracket, inducement. Now let's focus on the liquidity or the inducement part of the trading. We've talked about the first part, which is the market structure. Now let's focus on the structure, on the liquidity part of it. I've talked about the first part of my trading strategy, which is the market structure. And under the market structure, we have the market structure shift and we have the break of structure shift. These are the first two things I look out for before picking entry on my trade. So now let's focus on the second part, which is the liquidity. And liquidity is the first valid pullback market makes after a market structure shift or a break of structure. Liquidity here, I'm writing it down for you guys. Let me repeat myself here. Liquidity, right? Liquidity, or in bracket you can say inducement. Inducement is the first valid pull back market mix after MSS, market structure shift, or BOS, which is the break of structure, right? The first pullback market mix after valid is the first valid pullback market mix after MSS or break of structure. Let me give you examples. Okay, let me use, should I use this one? Okay, let me use this one here that I've worked with here. Okay, we have a series of higher highs, higher low, higher highs, higher low. For the market structure part, let me explain it. So price broke this zone here, right? Price broke this zone, and the first valid pullback would be this pullback that price did here. This is the first pullback price do here before continue on the move, right? So price market has to first bring a pullback, then comes back to that pullback. Let me give you another instance from a different perspective. Not this. Let me not use this one. Let me use a different perspective. Let me start with the BOS. Okay, we have a series of higher highs, higher low. Market break structure here, right? The first pullback that market will do, right? This is the first pullback after market break this structure, right? Is what we call inducement. But for it to be valid, my price has to first move back up to 50% of it, right? Let's say 50% of it, or full back like this. Then it will not come back to tap my point of interest, which is here, before I'll continue on my buy, right? So price has to be like this. After break of structure here, I'm targeting this one to break of structure here. The first pullback, which is this one, is my inducement. So after first pullback, price has, for it to be valid, the inducement to be valid, price has to pull back again to like 50% of this pullback, or sometimes price has to pull back ahead of itself with a candlestick, or with a full candlestick, or more than 3 or 4 candlestick first, pull back first before it now comes back to tap my entry, which is this my point of interest here, which I mark out for. Then before I go on a buy, right? Before I go on a buy, depending on what point of interest I'm looking at for. So price has to the first value pullback that price has to make here. This zone here is my liquidity, which is my inducement for the break of structure part. This is for the break of structure part. For the break of structure part, let me label here break of structure. So for the break of structure, after price break structure, it then now pull back. For it, the break of structure to be valid, it has to, for a valid pullback, the pullback has to cover at least 50% of the last move. This is the last move after break of structure, it pull back. So it has to cover up at least 50% like this. 50% of it, maybe in the middle, then before you pick, it comes back to your entry, and then it moves on the direction you want, right? That's for the break of structure. While for the market structure shift, on the other hand, let me use market structure shift. On the other hand, price, let's say price has been giving us a series of higher highs, higher low, higher highs, higher low, higher highs, higher low, higher highs, and then price break this zone here. It has to first pull back, right? Then maybe pull back again to cover up at least 50% of this first valid pullback here, at least, right? 50% of it, or let's say here 50%. Sometimes it will pull back here, sometimes it will come back and even cover up more past itself before it now taps to my entry point here. Then they now move on a sell. Let me give you an example. Not married it very well. We have a series of break of structures here, right? Like I told you guys before, BOS here. Here is BOS, here is BOS, here is BOS. I don't want to be labeling all part of it. I'm labeling here to BOS. Then price decided to give us the market structure shift here, right? This is the MSS market structure shift here, right? I mean, price is changing direction to price is changing direction to now to sell, right? So the first value pullback was this pullback, right, which it gives us as our inducement, right? So what makes this first pullback valid? Because price still pull back to the previous direction up to 50% of it, right? Then it pull, but sometimes it breaks the first pullback, so before it now comes back to our point of interest, which is where we're entering our trade here. From here can be labeled as my inducement, because what makes it valid is because of this. After this pullback, after break of structure, market structure shift, there was a pullback, and what makes this pullback valid, because price still pull back to this zone to almost 50% or more than 50% of it. Then I pull back, see, breaks it, and then I pull back to this zone to my point of interest. That's what makes it valid. That's what makes it valid for the market structure shifts. That's for this one is for the bullish, this one is for the buy, and this one is for the sell. This one for buy from the break of structure side, and this one is for MSS. Let me label it MSS plus liquidity IDM. IDM is my inducement, which is also liquidity for bearish movement. Bearish movement, right? This is for the bearish movement. Yeah, like this. So here you name it your IDM. I just label it IDM. Inducement. Maybe it's right up. I'll make it bold. So here is my IDM, and this place here is my point of interest. So I've teach you two parts of trading strategies, right? We have the market structure. The market structure is when price break the recent low, right? And then it starts to change direction, and then inducement, which is the first pullback after a market structure shift or a break of structure. The first pullback. Then the third thing is the point of interest. Our point of interest can be my break of structure, or can be my breakout block. We'll look into that, but what we are talking about now is the inducement part of it, right? Price created this zone. Let me show you on the charts. I think I have it in my chart here. Definitely I must have it in my chart here. Yes, this one I was telling you guys about. What did you notice here? What did you guys notice here? It's just something similar I was telling you guys here. So market decided, let me take this thing out here. This one I dropped before, if you can remember. Market give me market structure shift after breaking of structure here. It was the last recent break of structure price did, right? Then I'm like with BOS up. Then decided to keep, then price pull back, decided to break this zone here. After price break this zone, I give market structure shift. Which one was the first pullback? This was the first pullback after market structure shift. What makes this pullback valid was because price did pull back with a single candlestick. If you remember what I said, it can be a single candlestick, it can be a multiple candlestick. With a price pullback with one single momentum of candlestick to that direction, it covers more than 50% of the pullback, right? Then it now pull back, then I tap to my entry here, then it now sell, right? So here can be my inducement. Here is my inducement IDM. Understand? Here is my IDM. Let me reduce the size here, maybe 8, then top, and let me make it bold so you guys can see it very well. Understand? See it. Market structure shift, first pullback, right? Then I pull back. What made my value, my pullback value was this pullback that it did here. Then it now tapped to my entry point where I'm targeting my entry point. Then I'll sell. This was the same thing I was giving you guys here, right? That part is for the MSS. I'll still show you for breakout structures part. Same thing I was giving you guys here. The same thing I'm giving you guys, I was showing you guys here, the same thing I'm showing here, that's the same thing on the chart. Now let me look for the break of structure. I will look for this right here is for market structure shift for bearish movement. I will show you for the bullish movement, and this right here break of structure for bullish movement. I will show you the break of structure for bearish movement and the break of structure for and the market structure shift for bullish movement. Understand, right? So this was it right here. Something simple, just simple, that's very simple. Then I'll pull back, it gave me that trend. Then I'm look for a strategy here. Okay, this zone here, I think I picked this entry. Let's pick this and let me explain this one. This is entry here. Okay, let me explain it here. This entry here was a market structure shift. This zone here, I can use this candlestick here, but let me use this one outside here. This was the MSS zone here. MSS zone right here. That was an MSS zone right there, market structure shift. Because if you notice, price has been giving us break of structure here. Then break of structure again right here. I tell you, each candlestick pass information, right? Break of structure here, break of structure here, break of structure. There is no MSS. Sorry. Here was also break of structure, not MSS. Here was break of structure, not the MSS. Then what did the price do here? What did you guys notice? What did you guys notice here? Price did what? Break this zone this week here. Give us our MSS. I think I forgot what time frame I used to make this analysis. Give us our MSS here. Then what did happen? The first pullback was this pullback, right? Right? But what makes it valid? Price. The first pullback was this pullback here, right? After this break of structure, let me use this thing. Price break of structure here. Then the first pullback was this pullback here, right? What makes this pullback valid was because of this first pull, this momentum of back. It went back to it covered more than 50% of the valid pullback here, like this, right? Then it now comes back to my entry. I use this order block zone as my entry before it now continues on this scalping move for a buy, right? So now this part now explains this pattern. Let me take this pattern now out now for you. Let me take this pattern out for you now. This pattern explains the market structure shift for the bullish market structure shift plus the inducement for the bullish parts. I'm put them closer so that you see them. I don't want to make them far from each other. Sorry. I'll arrange it once they are closer to it. Okay, let me just do it again. The bullish part of it, price was like this. Price was moving a series of lower low, lower high, lower low, lower high, lower low, and then it now breaks it up, right? So the first pullback was this pullback, right, which is my inducement, right, which is my inducement. So then now for this pullback, this first pullback to be valid, price has to come back again to the previous pullback and make sure it covers 50% of it, or if possible, say it breaks itself, right? Then comes back again, should be forming something like this, right? Then before it to come back to my point of interest here, and then moves up. Understand? What did you notice here? We are having BOS here. BOS with my breakup structure. Let me look for the downside here. The descent zone here is BOS. I don't want to take much of my time here. BOS. Right? So here is our what? MSS. Right? Here is our MSS. With market structure shift. Right? We just finished for the selling part now. We're looking for the bullish part now. So price comes back here to my point of interest here. The first pullback after break market structure shift is what is called the inducement or liquidity. Understand, right? So some people will pick their entry here, but they don't know they are being trapped. They are being trapped. This is where smart money will trap them here and then take them out. Then it now respect this zone before it now move. So this zone here is called the IDM, inducement, right? Right, it's called the inducement. Then it now tapped into my entry here, and then it now give me this valid point. It give me this valid movement here I'm having here. Understand? So you see, this is very clean something. Very clean something. Give me this valid movement here. This one is the MIS for the bearish. Let me label it. So this one for the bullish. Market structure shapes MSS plus liquidity IDM, which is also known as IDM. For the bullish parts, the bullish movement, right? Well, this is for the bullish movement. I'll explain for the bearish movement. I'll show you the chart for the bullish movement. Let me just do this for the market structure shift for the bullish movement. Understand, right? Remember, liquidity or inducement is the first valid pullback market makes after MSS or break of structures. MSS is called the market structure movement, which is also from this zone. I'm zooming it out for you. Right? This is my first inducement. After market structure shift, that was the first pullback. For this pullback to be valid, it must at least cover at least 50% of the last move. This was the last move of the IDM, so it covered 50%, more than 50% here. Then it now pulled back to my point of interest and now move. The same thing here. After I break MSS here, the first pullback was pullback here, and then it now covered up at least 50% of it before it now move back to my point of interest. It now trigger for a sell, right? So now let me do for the bullish, for the break of structure now. For the break of structure now, let's see. For the break of structure for a bearish movement now, right? Let's see, price has been giving me this movement: lower low, lower high, lower low, lower high, right? Then it now give me lower low again. This zone here, this is break of structure. The first value pullback here was this pullback here. It now pull back. It has to cover up at least 50% of it, or here like this. Then to come back to tap to my point of interest here. Then it moves down. My point of interest that I pick out is the recent zones. My inducement, I pick out my point of interest from the recent zone closer to my IDM. My point of interest, I pick out zones that are closer to my inducement. This is the only zone that I notice is closer to my inducement. I pick it out, then and I'll sell it. Right? So this was my breakup structure. Can I be a breakup structure? BOS down, right? Yeah. So which if I say where would be my first pullback, here was my first pullback that market did. It did first pullback here, so I'll label here as my IDM, inducement, right? Inducement. Let me label IDM, inducement. Inducement. Inducement, and then pick out from our point of interest here. That's alright. We respected these zones. Respect this zone. Now not selling, and this will be my BOS for the bearish movement. Label here MSS for the MSS. Here will be my, here is what I'm label this zone here as my BOS plus IDM for my for bullish movement, for bullish movement. For the bullish movement, while we have the market structure plus inducement for the bearish movement, while up here we have the market structure plus inducement for the bullish movement here for the market. Then we have the display zone. We have the BOS OS plus IDM inducement for the bearish movement. I hope you guys are understanding what I'm doing here. Just simple. I'm gonna spread it out for you so that you guys see it clearly. These are all I was doing. So all I was doing, right? This is all the part of the inducement liquidity I'm talking about, right? So now let me explain this movement here and then this movement here. I've not explained it. For the bullish part, I've not explained it here. The bullish part, if you notice, it's the same thing, similar with this, the pattern, chart pattern I just designed down there. It's something similar that I did up there. I was having what? Let me use this was a break of structure from here to here. Then here to here. Let's do to here. Pull back here to here, right? Then I can now move bound here to then pull back. Then for it, this pullback to be valid, it has to pull back again to clear it, or 50% of it, which it did more than that. Now tap to my entry, then move to the zone. You see here, give me a valid entry. That was an MSS here. This is my inducement. This X is my inducement. Then it tapped to my entry point and move. The same thing happens here. After it pulled back, that was the break of this one for the break of structure. It breaks structure, now pull back, right? Then pull back here and do this thing. Now pull back here, then give me my inducement and then tap to my entry point and move, right? I've explained the bullish part of the MSS for you guys. Now let me look for the break of structure part of it. Look for the break of structure part of it. This also here has the market structure shift here. Market break this. I can pick these zones. I can pick this zone here. Let me delete this one here. I'm in this zone here. There was price broke this zone, right? Break of structure, right? I can pick this zone or pick this zone as my MSS. Let me pick this zone as my SSF for a clearer verification. You can pick this zone as your MSS if you want. Then what did price do? The first pullback was this pullback. What makes it valid? It pulled back to the zone again, right? More than 50% of this, right? So this zone, I mark this zone as my point of interest. I said for you can mark here. You can mark here as your IDM if you want. But but this was the recent low that is close to my point of interest. As I mark this zone here, then tap to my entering point. Then now start selling to this zone here, right? Now start selling to this zone here. I want to look for the break of structure for the bullish, the bearish part, and then bullish part. I think I should be having them on my this part here. If you notice this chart here in particular, we have break of structure in this zone. Price now break it here. Might give me market structure shift here, MSS here. Then this was the first pullback. Then now continue pulling back. For this pullback to be valid, it has to pull back again, right? You now pull back. I was patiently waiting for it to be a successful trader. You have to be patient. I was patiently waiting for it now tap to my entry here and then move. Same thing here. I'm having a break of structure in this zone here. I'm doing this thing. I'll make a break of structure in this zone here. Then I think it should be I use 15 minutes or 5 minutes for these entries. Come up to 15 minutes. Okay, so I was going to show you the bullish part of the inducement. I said I'm going to show you the bullish part of the inducement, right? I have a break of structure here. Price pull back. There was a break of structure here, right? Then price pull back here. Then I'll pull back here, which is my inducement, right? Then I'll pull back again to it. It cover up at least 50% of it, right? Before it now tap to my entry here, point of interest. Then I'll make this massive pullback. I hope you guys understand what I was telling you guys. What I'm telling you guys. So same thing here. I'm having break of structure here. These are the break of structure in this zone here, right? Price pull back, right? And then it now pull back up again. We just making movement until I was basically waiting for it until it tapped to my entry zone here for it now give me this massive buy. I was having here the same thing happens here. I'm having a break of structure here, pull back, move up, tap to my entry, then I give this massive movement. Understand, right? The same thing happens here. If you see, all my chart has similar thing. Break of structure, which is my market structure. Inducement, this X is my inducement, which is my liquidity and point of interest, which I'm going to teach you guys the point of interest. Now, hope you guys understand what I'm talking about, the market structure part of it, right? If you understand, it's just something similar and simple. That's what we do repeatedly every day. That's what I used to do every day. So I've explained two things that I look out for before I take any trade. I explain market structure, which I look out for. Under market structure, I look out for market structure shift, which is also known as change of character. It's an indication that the trend is about to end and a new trend is about to start, which I explained to you what market structure shift looks like. I was having a bullish market, a bullish trend, uptrend. Market decided to change structure here. Okay, then it now started selling. Same thing here. It changed structure, it now started buying. Why the break of structure is when price breaks a recent level, such as the resistance level or support level, to continue its current trend. Price break levels like this. Price is breaking level here. Pull back, continue its upper trend. It's just creating its upper trend. It's just creating trends up levels, right? So it's in a continuous trend. Market structure, BOI, break of structure is a continuous trend, while market structure is a change of trend. Understand? So I've also explained in the second part what I look out on trade on my strategy. Second part of my strategy that I look out for before I take entry, which is the liquidity induce, also known as the inducement, right? The first valid pullback market makes before the first valid pullback market made after market structure and break of structure. I didn't say before, I said the first valid pullback market makes after market structure shift or break of structure. I did not say before. It's the first valid pullback, which I showed you guys here. Which I've shown you guys here. That was the break of structure here. Market change of character here, right? I mean, market is no longer selling to now be buying. So this was the first pullback. A pullback, then decided to continue on an uptrend, right? That's the first valid one. Hope you understand what I'm doing. Same thing here. This is for the bullish movement. Let me show you the bearish movement. This is for the bearish movement. This is for the bearish movement here. Same thing with the break of structure for bearish movement, and this is for the bullish movement here. So take a look at it, just grab it. This is how the chart patterns look like. Very simple, not hard thing, no feelings attached, just something simple. Understand, right? So now we'll go to the next part of what I look out for before I take any trade. I've explained the market structure shifts, the market structure part. I've explained the liquidity part, which is also the inducement. Now let's focus on the point of interest. The point of interest, we have two types of point of interest. We have I look out for. We have the breaker block and we have the other block zones. So that's what next we'll be talking about right now. So take a time and go back and watch this video very well and then continue. And also don't forget to subscribe to my YouTube channel. So look at it very well, then we'll go on. We talk about the first two parts of my trading strategy, which is the market structure, where I said in the market structure we have the market structure shift, which indicates that the trend is about to end and a new trend is about to start. And also have the break of structure, is when price breaks a recent level or support or resistance level to continue its current trend. And we also look at this liquidity zone, which I also call as my inducement. Is the first value pullback market makes after market structure shift or break of structure. Now we talk about the point of interest. The point of interest, my point of interest on trade, I look at two point of interests. We have the order block. We have the order block. Order block. And we have the breaker block. Of the breaker block. So we'll first look at the breaker order block, then we'll look at the breaker block next. So an order block are areas where big players like banks, hedge funds place their large buy or sell limit orders. Or you can say an order block are those zones where there is a lot of institutional orders. What I mean by institutional order is when, like for instance, those zones where people place big bankers, like all those big traders place their institutional, but not us. Like us, we that trade with $100, $200, $1,000, $100,000. We don't make any move in the market. Those people that make moves in the market are those people that place 100 million, 100 million, 1 billion, 2 billion. Those are the people that make moves in the market. So we call them the institutional orders, or institutional buyers or sellers. They are the people that make moves in the market. So those are the people that make moves in the market, and those are the people that set they set places for their buy or sell orders, limit orders, if you understand what I'm trying to say. So on order block, we have two types of order block. We have the bullish order block and we have the bearish order block. That's what we'll be looking at for right now. We have the bullish order block and we have the bearish order block. The bullish order block is when we're trying to take our buy limits, and while the bearish order block is when we're about to take out, we used to take it for our sell limits. Sorry. Sorry, I'm trying to pick out the color, right color. I'll make this. So we have this the bullish order block, and we have, let's draw the bearish order block. That's how it looks like. Let me shift it here a little bit. Let me shift it a little bit here. I have the bullish order for when we're trying to take bullish order block for when we're trying to take our buy. So when you're putting your SL, you give it a little bit space, like 2 to 3 pips, just because of spread or any other thing. We'll take our buy. And we have the bearish order block when we're about to take our sell. Give it a little bit pips space up there for just because of spread taking the trade. So that's what a bullish order block looks like and what a bearish order block looks like. Two types of order block. Bullish order block, and we have the bearish order block. bearish order block. Understand, right? So that's how it looks like. So these are what we look at. These are what I look at when I'm about taking entries on any other trades. So we have these are what it look like when I'm about to take an entry. I look out for these zones before taking entries on markets. So for those people asking, what if there's wick? Okay, for instances, if there is a wick, how are we going to take our entries? Let's say if there is a wick like this. And we have this kind of wick also. Let's use this wick as also use that wick also. Right, how are we going to take an entry when there is kind of wick and this wick? For if there is a wick on other block, on the other block zones, and if you notice that the body of the candlestick is bigger than the wick, you pick your entries from the wick. Pick your entry from the wick, and the ASL should be below it, right? But if for instance here, you've noticed that the wick is bigger than the body of the candlestick, so you pick your entry from the body of the candlestick, not the wick. Forget about the wick, right? But for instance, if the body of the candlestick is bigger than the wick, you pick your entry from the wick and then close it below the body of the candlesticks. I think I have some kind of videos that I usually do as a video, kind of point of interest I picked out for. So when picking other block, when you're looking for a sell, you use this other block for FM formats to pick for the bearish movement. But if you're looking for a buy, you pick this kind of entry point, then you look for your other block zones, kind of other block zones to pick for your buy. If you notice, the difference is this smaller body. For the bullish order block, the smaller candlestick has a bearish body, and the one engulfing it has a blue color. Right, the color doesn't matter, but what matters is the body. So your color might be different from my own color, the way I graded it. So it depends on which one you're using, what kind of color you're using for it. So that's what it looks like. So if I'm picking my entrance, let's look at the first part. Let me give you an example. Let's look for the first part of it. I think I have videos here, and I was about okay. I think this should be, let's use 15 minutes. Let me check my yeah, let me use this let me use BTC to make my analysis, to show you some stuff for an order block. Right, this is an order block level here, right? I use the body. I also first have market structure shift. Then what will I this is the first part of my strategy is market structure shift, the structure part of it, which I found my market structure shift here, right? Then the pullback, this candlestick, you can call it a pullback, right? You can call it a pullback, but it now pulled back, it now went up, comes back. Then my point of interest is with these other block zones. Price came back to target it and then went up. So this is my market structure. My first buy was this candlestick here, this bearish candlestick, right? So you can pick as your entry, you can pick as your inducement here like this. Label it as your inducement IDM, right? And this was my point of interest. Market went for bullish. That you notice something. I have a bearish candlestick first, then the bullish candlestick came next. That's how I got my entry for bullish candles, so bullish other block zones, right? Let me give you an example of another one again. Remember the market, this market was selling, right? Before you don't change character to change market structure shift for an uptrend. That's when I got my buy. Why? You remember other breaker block zones, break of structure zones for continuous buy or sell on the current price, right? While the market structure is an end of a trend and a new trend is about to start in the opposite direction. So the market was selling, right? They now give us a MSS here, so that is telling me that a new trend is about to start. That's how I got this big movement here, whereby while this one's for the continuous trend, right? I was having break of structure, the first pullback. You can name this one as the first pullback. Pick this one here, but I picked this one here because it's a week below it. And let me this X here, let me my X, and this candlestick here. You notice candlestick here was my other block. That's how I pick this interest. I picked the body. Then this one is for breaker block, so I won't say much on it till I teach you guys what breaker block means. So this one we have the other block zone, tapped in and now move, right? These ones are for buy. Let me look for sell. Let me look for sell. I'll show you guys something on sell. I think I have something here. I think I should be having something here. Let me check my previous chart. For the sell, right? I was having market. Let me move this. I was having market structure shift after this break of structure. You remember I explained it. So I was having a candlestick here. This was my point of interest from these zones. Right? This was my point of interest. This candlestick here. We have the blue one and the bearish one. The bearish one engulfed the blue one, right? So this was my other block zone, and I picked my entry. And you notice my SL is just above it a little bit, right? That's how I got this long sell, right? Remember, market structure is when it talks about when a trend is about to end and a new trend is about to start in the opposite direction. I was buying the market direction, you now start selling, right? That was it. There are about 4 to 5 rules of other block before picking a point of interest. I will tell you guys in the next class. So in my next class I'll be talking about breaker block, and I'll throw more light on the other block again, right? So sorry, I'm trying to look for maybe other zones to show you guys. Breaker block entries. I don't want to talk about breaker block entry right now. All these ones are breaker block entries. I don't want to talk about them. This is an order block entry here. I have something on BTC. Yes, I think it's on my 1 hour time frame. I have something on BTC. I have something on BTC on my 1 hour time frame. Is it BTC? Yeah, I think BTC. Yes, BTC is an order block zone here. Also, that price took entry from. Now start selling, and we have our liquidity here. Can use this as a first pull, but I decided to use this one because this one is closer to my point of interest, right? And we have a break of structure here, right? So that's how I got this entry. Then it now starts selling. I'm expecting to reach this level here. I'll use the wick. Right, I'm using the wick. Then this one will be above the wicks, a little bit smaller, like this. Right, now that I got this, so I'm expecting it to go down the string. That's what I'm waiting for right now. If you have any question, please drop it on my comment section box and I'll take it from there. This is what I mean. These are other block zones entries. So this, for my point of interest, I look out for other block and breaker block entries. Which I just explained right now here. So be careful what kind of point of interest you look out for. Big trees, right? So bye for now. I'll be, my next class I'll be talking about, I'll talk about the bearish block, the other block, and the breaker block. I'll talk about the four rules of an order block zones, right? We'll talk more on that.